Welcome to the deep dive. Today we're jumping into something pretty unexpected, actually the intersection of geopolitical conflict and crypto. Specifically, how the recent Iran-Israel tensions really shook up Bitcoin.
Yeah, it's a fascinating and pretty volatile mix.
Absolutely. So our mission here is to cut through the noise, look at the sources we've gathered, and figure out what you need to know about how these big global events are hitting digital finance.
Okay, so the first thing that just jumped out was the immediate market reaction. A real risk-off feeling spread everywhere, fast.
Across all markets.
Yeah, all financial markets. And crypto definitely wasn't spared. We saw investors pulling back from anything seen as higher risk.
And the numbers.
Pretty stark. At the peak of the military action, something like over $240 billion was wiped off the total crypto market cap, just gone.
Wow, $240 billion. That's
Yeah.
massive. Was that just like retail panic?
It was broad. Definitely fear-driven selling, yes, but also huge liquidations of leveraged positions, margin calls, and we even saw some major crypto whales selling off big chunks to lower their risk. A real cascade effect.
Okay, so that brings us to Bitcoin, doesn't it? Because there was this whole narrative, this hope that it would act like digital gold.
Right, the safe haven idea.
Exactly. A place to run to when things get messy globally. But that $240 billion figure suggests maybe not.
Yeah, this whole episode, well, it made it pretty clear Bitcoin didn't play that safe haven role. Not this time, anyway.
So what did it do? How did it behave?
It acted much more like a risk-on tech asset, very similar to how high-growth tech stocks behave in these situations.
Okay. So mirroring the NASDAQ rather than gold.
Pretty much. We saw it crash from around, $109,000 down below $98,000 when tensions were highest. That really links it, in the minds of many investors apparently, to the tech sector, not to traditional safe havens.
Despite the whole decentralized pitch.
Exactly. It shows that, right now at least, a lot of the money in Bitcoin still sees it through that growth stock lens. Vulnerable to macro shifts, vulnerable to geopolitical shocks.
So, quite a tumble. Where are we now, then? Has it found its footing after that drop?
It's stabilized, sort of. It's been hovering around the $100,000 to $104,000 mark.
Okay, so $100 is holding.
For now, yes. It seems to be a really key psychological level for the market. But for a real bullish comeback, Bitcoin needs to break firmly above that $107,000 to $112,000 resistance zone.
That's the next hurdle, then.
That's the big one for upside momentum. Until then, we're kind of stuck in this consolidation phase.
But the impact wasn't just price charts, right?
Yeah.
Our sources pointed to some deeper, more systemic risks emerging from this conflict for crypto.
Yes, definitely. Beyond market jitters, we saw the rise of cyber warfare specifically targeting crypto infrastructure. That's a big one.
Like actual attacks.
Yeah, for instance, the Iranian crypto exchange Nobitex got hit hard. Reports suggest around $90 million worth of crypto was basically destroyed in that attack.
Wow, $90 million. That's not just lost funds.
It's a new kind of risk, right? It shows how digital assets themselves can become targets, weapons even, in modern conflicts. And this ties into another point: regulation.
Yeah. Always follows the money or the conflict.
Always. Geopolitical tension almost always means tighter scrutiny, especially around anti-money laundering AML and tracking international crypto flows.
Because both sides might be using it or trying to stop the other side from using it?
Precisely. The sources noted both Iran and Israel have either used crypto or are actively monitoring it in ways related to the conflict. So regulators globally are watching this very, very closely.
Okay, so we've got market volatility, cyber threats, regulatory heat. If these tensions continue, what are the key things you tell people to watch out for? What's the outlook?
Well, look, if things escalate further, expect more volatility, probably more downward pressure on crypto prices. It's still seen as risk-on.
But if things cool down,
then you could definitely see some relief rallies. Bitcoin might push back above that $110,000 level if there's genuine de-escalation. But it's going to be tied heavily to overall market mood, and crucially, we can't ignore the potential for more cyber incidents.
Right. So bringing it all together, if you had to distill the single biggest lesson from this whole episode, based on our sources, what would it be for understanding Bitcoin?
I think the clearest takeaway is that Bitcoin isn't acting as that geopolitical hedge people hoped for. Not yet. It's still fundamentally a speculative, tech-linked asset, very sensitive to sudden shocks.
But it did bounce back somewhat.
It did, and those sharp rebounds do show there's still strong long-term interest. It has resilience, but it's not immune to these big global events, not by a long shot. It showed its vulnerability.
Which leaves us, and you listening, with a really interesting question to chew on. Given how Bitcoin reacted here like tech, not like gold, How might the role of these decentralized digital assets